This split screen captures a global divide. On the left, trillions of dollars move through digital networks at the speed of light. On the right, 1.4 billion people still rely on the manual exchange of paper bills over a counter. Operating entirely outside the digital economy creates significant friction. Every bill payment or money transfer requires physical travel and manual processing, which consumes time and incurs high transaction fees. Traditional banking hasn't closed this gap. The cost and logistical difficulty of building physical branches in remote or underserved areas make the conventional model of expansion impossible to scale. Connecting a local cash-reliant economy to a global ledger requires a bridge that can be deployed instantly, without the overhead of traditional construction. Real financial inclusion means bringing digital tools to the cash points people already use. Instead of moving the people to a bank, we have to move the banking capability to the local shop. Consider a typical neighborhood store. The most consistent point of interaction in this environment is the checkout counter. A MOST point-of-sale terminal on the counter acts as the intake node. The clerk uses a specific interface to process deposits, turning the store's existing hardware into a gateway for digital capital. The local store icon links directly to the central hub of Sigma BankAI, providing the regulated financial framework. These connections are managed by an AI operating system, monitoring in real time to predict cash needs and balance funds across the network. This configuration allows a neighborhood shop to function as a distributed node for the bank, processing transactions through the network's central hub. The process begins when a user hands paper currency to the clerk. The clerk then selects the cash-in protocol on the terminal to start the digitization. The system uses real-world asset tokenization. The moment physical cash is accepted, an equivalent value in asset-backed digital tokens is generated. These tokens form the Alkoin architecture, an instant settlement utility layer moving value to a secure ledger with traditional wait times. To claim the tokens, the user performs a familiar action. They bring their smartphone close to the terminal for an NFC tap. If NFC isn't an option, the terminal generates a dynamic QR code on a physical receipt, which the user scans to authorize the transfer. The digital assets move directly into the user's Web3 wallet, bypassing the multi-day clearing cycles of the traditional banking system. The handoff is complete. The user has traded paper bills for digital value that is now instantly accessible on their phone. Once the cash is digitized, the user can participate in the global economy, paying for services online or sending money across borders with a few taps. However, digital value is only useful if it can be converted back into the local currency when needed. A two-way bridge ensures the user's capital remains flexible. This flexibility is provided through integration with existing infrastructure, such as the MoneyPass cardless ATM network. This sequence shows a cardless withdrawal. The mobile app transmits a secure cryptographic key to the ATM, which triggers the authorized release of physical cash without the need for a plastic debit card. This creates a loop between the digital wallet, the local shop, and the ATM network, allowing value to move between physical and digital forms as the user requires. This world map illustrates the potential scale. Every dot represents a retail store that, once activated, becomes a functional part of a global web. This allows the network to grow by utilizing hardware that is already on the ground. When these millions of retail endpoints are activated, the cost of entry for the unbanked drops. Access to the global economy is no longer gated by a physical bank branch, but by the nearest neighborhood checkout counter.